Hey guys, hopefully everyone is doing well. Today's target is to solve question number 9. The chapter which we are related with is accounting ratios. My voice is little bit disturbed. Hopefully you can ignore it. Alright, in our question, only balance sheet is provided. Look at here, liabilities are assets given. It means ratios related to balance sheet are only required to calculate. So we do not need to calculate gross profit ratio, liquid ratio, operating profit ratio. These ratios are related with profit loss account, while here only balance sheet is given. Secondly, we are asked to calculate long term as well as short term solvency. Please underline this word solvency ratio. For that, in short term, you need to calculate current ratio and liquid ratio. For long term, you need to calculate debt equity and fixed ratio. Although this hint is available over here, but in examination you will not be given this hint. So please remember, in short term solvency, current ratio and liquid ratio. In long term, you need to calculate debt equity and fixed ratio. So introduction has been given. We are now very open to start our question. Since we need to calculate long term solvency, for that we will calculate debt equity ratio first. There are three formulas of debt equity ratio and we can use any. So let's try the first one, external debt over internal debt, external liabilities over internal liabilities, one of the same thing. So let's see what our question says. Please note it down. Current liabilities are openly given. Current liabilities, you are liable to pay to bill payable, account payable, note payable, to bank or to your creditors. So this is outsider liabilities or external. So you will write 250,000 as your external debt, and now capital we understood it is internal liability. What is this fixed liability? Fixed liability means you are not liable to pay this loan in shorter period of time. So a long term commitment has been made. And please understand, external parties will never give you a chance to pay their amount after a longer period of time. These are only internal people. So these two share capital and fixed liabilities. These two are internal liabilities. 5 lakh and 250,000. This is your internal debt. Alright guys, we are now open to put them on calculator. We need to take sum of internal debt, and that's what we have got. Now external debt 250 divided by internal debt 750. So we have got our first answer 0.33, and you can see over here debt equity. Oh good, what happened, we by chance we have applied first formula and we have got the answer. Otherwise what was required, we need to put the second formula which you do know, long term debt over long term funds. This is third formula, and then let me put a divisor in between these two features. And second formula, long term debt divided by shareholder fund. So please understand, there are three formulas related to debt equity, but by chance we have applied first formula, external over internal debt, and we have got the answer. It means our book writer has used this formula. So in paper you may use any one of these three formulas. Your answer will be considered correct, whatever formula you are using. Now second is fixed asset ratio, and for that what you need is fixed assets, and you will divide it with long term funds. Let's go back to the question. And luckily fixed assets are given by name. So we don't need to calculate. Fixed assets are given 6 lakhs. So you will directly put amount 6 lakh and then long term fund. For that we need to have the formula. Long term funds would be calculated by taking shareholder fund and then you will add long term debt. And for shareholder fund we do know capital plus reserve plus surplus and then we will add long term debt. Okay, so in this way long term fund would be calculated. Another thing is, if you want to use directly this formula you can use instead of writing it, but it is better to write shareholder fund first and then define how to calculate shareholder fund. Now there are three elements which we need. First is capital. Let's get back the question. Capital is given by name 5 lakh. Just put the amount and then you need to put reserve, and here is complete liability side. There are three items. Reserves are not given. So what you can do, just write down 0. Reserves are not provided. Then at third place we need surplus, and you can see that surplus is also unavailable or not available, so you may write 0. After that we need long-term debt, and here you can see fixed liability means you are liable to pay for the longer period of time. So this fixed liability is actually long-term debt, just difference of sentence. Otherwise fixed liability means long-term debt. So guys, in this way we are now open to calculate our long-term funds. So 750,000 long-term funds has been calculated. We were calculating fixed asset ratio. For that we need fixed asset divided by long-term funds. And by applying this formula we have calculated 7,50,000. This is our long-term funds. Now we are open to put them on calculator. Fixed assets 6 divided by long-term funds 75. So we have got the answer 0.8. Look over here, 0.8 fixed asset ratio. It means second answer has also been calculated. Now we will see short-term solvency. For that, first ratio which we will calculate would be current ratio. I'm sure you have memorized these formulas. Current assets are to be divided by current liabilities. So let's get back to the question. Look, there are two assets, liquid and stock. Both are current assets, so 3 and 1 would be written as current asset, 3 lakh 1. Now we will search for current liabilities, and luckily current liabilities are given by name, 250,000. So here just put 250,000, and now we will be putting both on calculator. First we need to sum all current assets we have got, and now current asset divided by current liabilities 250. We have got 1.6 current ratio, and look at here, current ratio 1.6. So it means our third formula is also completed. Now number 4 is liquid ratio, and that would be calculated by taking liquid assets divided by current liabilities. Liquid asset, luckily these are also given directly, so by name it is given 3 lakh are current liquid assets. Current liabilities we have already seen 250,000. Let me show you from your question. Current liabilities 250,000. So we don't need to sum them directly. 250,000 would be written over here as current liabilities. Let's divide liquid assets 3 lakh divided by current liabilities 250,000. So we have got our last answer 1.2, and look at here liquid ratio 1.2. So guys, in this way, first answer debt equity 0.3, 0.3 debt equity, fixed asset ratio 0.8, fixed asset ratio 0.8, current ratio 1.6, current ratio 1.6, and last liquid ratio 1.2 and liquid ratio 1.2. So in this way, our question has been completed. Although solution is in front of you, but you are very open to share your problems after practicing it. Please, I'm requesting you to practice this question by yourself for 2-3 times and then collect your problems and share your queries through messages, text, comments, or you can directly meet to share your problems. I will try my best to answer your queries instantly. So it's time to end our lecture. Thank you very much for your time. It's time to say goodbye. Allah Hafiz.